when money is lost in the stock market, where does the money go? Have you ever asked yourself that question? If you have asked yourself that question, I'm here to answer it today. So let's get into the video. Now, when you read the news, sometimes you hear the market say, or you hear the market maker say that, oh, 2 billion, 2 trillion, or any amount of money was wiped off the stock market today. And when you hear that news, you tend to panic. And then the question is, where did all that money go? All those 1 billion, all those 2 trillion, whatever amount it is that was lost, where did all that money go? So you have to think about it in this perspective. The market is just like every other market where you sell items. So let us see that, for instance, I am a microphone dealer. I sell content creation equipment. And then I have 10 million of these ready to sell, because in the stock market, there are also people who are market makers who are looking to sell securities to you as well. So let's say I have, this microphone, I have 1 million pieces of it, and 1 million pieces of this microphone is valued at, let's say, $10 each. That would bring the value to about $10 million. That means the value of what I have is $10 million. Now, something happens for whatever reason, and then content creation becomes less fashionable, and then the price goes from $10 per microphone down to $8 for a microphone. Now, if it goes for that rate, that means we have lost $2 on each item. We have lost $2. So now that $2 translates to $2 million, because we have 1 million pieces. It translates to losing $2 million. So that means we have wiped off $2 million off the microphone market or off the microphone price. But guess what? If I don't sell the microphone, I don't realize the loss. So that is why in the stock market, it is treated as realized gains or unrealized gains, realized losses or unrealized losses. Because until you actually sell the security that you are holding, you have not lost money. So for instance, when you get on your MT4 and your MT5 and you buy for whatever reason, USD, JPY, whatever, that's a form of security itself. You buy that, and then you buy at, let's say, 1.20 per dollar on the pound, and then it goes down to 1.10. And you are seeing the red on the MetaTrader screen. That red that you're seeing there is your unrealized loss. It is not a loss yet. It is unrealized. So it is not considered a loss until you actually close the trade. So in likewise manner in the stock market, when you see price move from XY, from a very, very high price down to a low price, if investors don't sell their securities, if they don't panic and they don't sell, then nothing is wrong. Then everything is fine. Then the market is, it's just a normal day when price went down and I am holding on to the securities. I am holding on to my assets. I have not lost money. So that money goes nowhere. It is simply a price that was put up in the market. And of course, for whatever reason, investors did not want to buy at that price. And then the price dropped, right? When the price went up there, when the price went up to that high, for whatever reason, investors didn't find it an attractive level to buy. Of course, the price is forced to come down. If there were any investors who, for whatever reason, bought at that high, and then it dropped down to a very, very low price, those investors have not lost money. They are simply holding unrealized losses in their books. That is simply what it means. And that is why, for instance, when you are on your MetaTrader platform, and let's say you have a $100 account, and you've taken a very nasty trade, you are, let's say, $50 down. If you're down $50 and it's an unrealized loss on your account, it's minus $50, it's in red, it is not yet a loss until you close that trade. But let's say, for instance, you have that minus $50 on your account, and maybe the account is in a good level, or maybe the market is still within a good level where there's a good chance that it might recover if it's in the stock market, or currencies tend to just might move in one direction, over a long period of time. But let's say you, for whatever reason, you have the balls, you come into the market and you now inject $1,000 into that same account that was negative $50. That is an unrealized loss of $50. Now you suddenly find that you can actually hold out the loss. You can hold it out and allow the unrealized loss to run around. Eventually, let's say for whatever reason, technical, fundamental, the market comes around and then it comes back into positive. And let's say it's now plus $200. It's still unrealized gains. You still haven't closed it. So maybe eventually you close the trade for a win, which is what happens most of the time. Traders are hoping that they are going to close the trade for a win, right? And that's why they tend to hold out on all of these gains, on all of these losing trades. So you hold out, it comes into profit, you close it. You can see that red there, you did not sell when it was down. You did not lose money. It is just simply your unrealized losses. So when you see a big downturn in the market and then you see the market has, gone down significantly and you are hearing that 1 trillion was wiped out, it is just an amount of money that traders believe that that the market believed it was supposed to sell for that didn't sell for. And of course, if you don't sell the security back to the market or, back into the open market, you don't lose money. And that is just how it is. So the money goes nowhere because in the first sense, it did not even exist. Like, share, subscribe, and I'll be more than happy to see you in the next one. So tell me, did you know about this? Did you know where the money went before? Or you just thought it went into thin air, or you thought market makers took all that money into their pockets? Leave the answers in the comments, and I'll be more than happy to engage with you. Cheers.